on November 29, 2017, snake oil salesman Trump said this about the tax bill then working its way through Congress. Quote, "It is going to cost me a fortune, this thing. Believe me, this is not good for me." Recall that Trump has not released his income tax returns, as has been common for the past 40 years, although his 2005 tax return did become public. And what does an independent analysis of Trump's only public tax return show? That he, like almost every wealthy American, will come out much better under the House and Senate versions of the tax bill. An analysis for NBC News by Murray Cartine of Markham Group in New York City found a net tax savings to Trump of $22,500,000. And what is a proper response to Trump's claim that the bill is going to cost him a fortune? Liar! In a not so surprising development, during the first week of December, Speaker Ryan and Senator Portman released a letter gathered by Rate Coalition, a tax cut advocacy group, allegedly signed by 137 economists who said that they strongly endorsed the Republican legislation with no distinction between the House and Senate bills. Trump tweeted a video featuring this list. But surprise, an investigation of those 137 turned up employees of the Koch brothers organization, one who works for American Action Network, a dark money group that shovels funds to Speaker Ryan, John P. Elizariana, listed as an economist by the American Economic Association, but really a disbarred lawyer working as a paralegal in California, Seth Bide, who works as an office assistant at the New York State Tax Department, not an economist, and does not remember signing the letter, Gil Sylvia, supposedly an economist at the University of Georgia, although the university has no such person by that name working for it, a host of academics who turn out to be retired, and in-house economists whose employers stand to benefit from the massive reduction in corporate income tax rates. Mainstream economists from both political parties and a wide political spectrum do not agree with the Republican sales pitch that this tax cut will produce substantial economic growth. All agree that it will add to the federal debt. The federal deficit was, at one time, a principal Republican objection to almost every initiative that President Obama proposed. The Joint Committee on Taxation released its analysis of the bill on December 7, 2017, and concluded that the tax cuts will not pay for themselves, as its salesman argued, but will add to the federal deficit in substantial amounts. And what do the Republicans say about that studied analysis? They reject it, treating it like the EPA treats the physical science. Maybe it's not just our insulter-in-chief who is a moron, but all of his enablers in Congress. We are about to repeat history because in 2001 and 2003, as the Republicans were pushing other tax cuts, they circulated a column written by R. Glenn Hubbard, chairman of President Bush's Council of Economic Advisors from 2001 to 2003, saying that the 2001 tax cut would not hurt the surplus inherited from the Clinton administration. That opinion, that vigorous advocacy, was off by several $1 trillion. Next, we learned that during the secret last-minute negotiations among only Republicans, a deduction from taxable income was added to the Internal Revenue Code in a new Section 199A. This new deduction benefits owners of real estate held in pass-through entities. And guess who one of those owners is? Correct, it's Trump. In 2016, Trump made between $41 million and $68 million from 25 different pass-through entities. Senator Chris Van Hollen, Democrat of Maryland, condemned these new provisions in the following language. If Congress was as interested in delivering tax relief to the much talked about middle class as it is to the very wealthy, it could have copied this real estate developer's tax deduction and allowed individuals to deduct 20% of their income. But the Republicans in Congress, who passed this bill in record time, 47 days, without holding a single public hearing and without a single vote from any Democrat, were not aiming at middle-class tax relief, nor were they aiming to simplify the Internal Revenue Code. They just made it more complex with a formula that will require a full-time CPA to compute this new deduction for the very wealthy. The Nonpartisan Tax Policy Center released its report on the bill, which estimates an average tax cut of $1,610, or $31 a week in 2018, but the average household earning more than $1 million will get a tax cut of almost $70,000. On a per-week basis, the wealthiest will get a weekly tax cut about equal to the annual tax cut for the average American. Who can believe Trump when he says, in the face of numerous studies to the contrary, that this Republican tax cut for the richest is going to cost him a fortune? On Christmas Eve, while vacationing yet again at his expensive resort, Mar-a-Lago, Trump actually spoke the truth to fellow diners who pay $200,000 initiation fees and dues of $14,000 per year to remain members, when he said, quote, "You all just got a lot richer." In a shocking development to the Republican administration, Fox News actually criticized the Republican tax bill. On December 20, 2017, Trish Regan, a Fox News business host, said on Twitter and later on the air, "But what we see again is a Republican-controlled Congress doing exactly what it was bought to do. As Peter, Paul, and Mary sang many years ago, and would sing to the voters of today who will elect Republicans who pander to the richest Americans, oh, when will they ever learn?